Being a real estate investor can bring you some huge tax benefits, but it also comes along with becoming a business owner in the eyes of the IRS, which may mean you have to file taxes a little bit differently to get your maximum benefit. Let's discuss how real estate can help you save on taxes throughout the year. Hi, I'm Amanda Han, CPA and real estate investor, and today I'm going to be sharing what quarterly taxes are, when you pay them, how you pay them, and how you can use real estate to pay less quarterly taxes. Before we get started, I wanted to thank this episode's sponsor, DealMachine. Ready to multiply your real estate investments or snag your first deal? Discover why DealMachine is the top choice for both novice and seasoned investors eager to land more off-market deals. Imagine seamless access to accurate owner contact information for free, powered by the same data that supports 90% of US caller ID, boosting efficiency and reducing search time. Forget outdated skip tracing methods. Instantly find contact info for property owners hassle-free. Plus, with DealMachine's new private investigator tool, you can track down even the trickiest leads, like corporate owners. Streamline your deal finding process and start your free DealMachine trial today. All right, let's get into it. So what are quarterly taxes and who needs to pay those? This is a question I hear all the time from investors. In fact, investors are sometimes scared to invest in real estate because they're afraid of these quarterly taxes. So let's take a look at what exactly that is. Quarterly taxes are something that you have to pay if you have taxable income from certain activities where you're not already paying taxes on. Contrast that with W-2 income. When you have a job, when you make money every month, part of that is being withheld through your W-2 to pay the IRS. Alternatively, when we invest in rental real estate, we are not paying any income taxes on that, right? So if by the end of the year, I'm expecting to have very high taxable income, then there are times where you have to make quarterly estimated taxes to the government. How is that done? Usually it's done through a quarterly payment. You can do it via a voucher where your CPA will give you a small piece of paper that has the dollar amount you pay and you mail it in with a check. Or you can also pay it online as well on the IRS website. But here's the good news, guys. As you know, with being a real estate investor comes with a whole slew of tax benefits like write-offs and depreciation. So what we typically see with respect to newer investors especially is even though you might be having a property or properties with really good cash flow, odds are you're not going to have taxable income when it comes to tax time. Again, the reason being that we have a whole list of write-offs, depreciation, and deductions that we can use to offset the taxes on the rental income. In other words, if you have rental income but with enough losses and depreciation, you can get that to a zero taxable amount, then you actually don't have to pay quarterly estimated taxes on that. Quarterly estimates are only required if you are expecting taxable rental income after depreciation and after write-offs, which is the reason why for most investors, we don't have to worry about quarterly taxes. Now, let's take it a step further. What if I'm someone who owns a business or I have other income where I typically owe taxes? Can real estate help me reduce my quarterly payments that I used to make? And the answer is potentially. So if you're someone who owns rental real estate, and you can use that losses to offset your other types of income, then you could be able to reduce the quarterly taxes that you pay. Why? Because quarterly taxes are based on total income that a person makes during the year. So let's say I have $100,000 of W-2 income. I have $25,000 of losses from my rental real estate. Well, now my total taxable income is only $75,000, right? So in that scenario, I could lower my quarterly taxes because I'm not going to be expected to owe as much next April. And in fact, this is actually a strategy that we talk to clients about as well, especially for newer investors. If this is your first time investing in real estate, really important to know how much taxes you can expect to save with your rental properties. What we don't want to happen is have you overpay through your W-2 withholdings and through quarterly estimated taxes, where then you're basically giving an interest-free loan to the IRS, right? Because we want to keep our money in our pocket for as long as possible and avoid overpaying during the year to have a big refund. Because as we all know, when you overpay the IRS, they will just give you the money back, but there's no interest that you earn. And we all agree that that money would have better been used for me to purchase more rentals or rehab my existing properties or even just go on vacation, right? How do I know whether I need to pay and how much to pay? Here is where your accountant comes in handy. When you buy rental property, make sure you let your accountant know that you've purchased new real estate. That way they can help you calculate or recalculate estimated taxes. It's something that we frequently do at our firm. We tell people, hey, when you buy real estate, I need to know about it. Why? Because I want to help you estimate the tax savings from that property so we can reduce our quarterly taxes every quarter rather than waiting until the end of the year to save on taxes. And this goes without saying, of course, that if you invest in real estate, make sure you have a good tax advisor who understands real estate tax strategies. I hear all the time that it's very difficult for investors to find a good CPA or a good tax advisor well-versed in real estate. A lot of times people will ask for someone who is local to them. Really important to understand the location of where your tax advisor is not as important as the fact that they specialize and understand real estate. And if you really want to narrow down the answers to your specific situation, it's important to find that investor-friendly CPA who understands your unique circumstances. And the good news is that BiggerPockets has a resource to help you do just that. You can find one in your area at biggerpockets.com/taxfinder. Thank you so much for listening. If you have more questions, feel free to leave us a comment in the chat. And you can also connect with me, Amanda Han CPA, at biggerpockets.com. Until next time.